Hello everybody, welcome back to another valuation investing video, and today in this video I'm going to be going over Intel stock. And as we can see here, the stock is up 21+% in the past 5 days. And as we can see here, this big spike on September 18th had some huge news coming out from Nvidia, in which Nvidia actually invested $5 billion into Intel stock. So Nvidia is a part shareholder in Intel as of now. So Nvidia decided to invest into Intel. The stock just skyrocketed on September 18th. It was up almost 30% in one day. So with that being said, I'm going to be taking a look at Intel as a company and deciding whether or not we should be investing into Intel stock today after this huge investment by the biggest company in the entire world, which is Nvidia. So first, taking a look at the market cap, we can see here Intel is trading at $138 billion market cap, so this is a pretty big company. But as we can see here, they actually aren't making any money right now, so that's not good. But Nvidia did just invest in them, so let's take a look at the details. As we can see here, investors here did realize Nvidia's announcement of $5 billion stake in Intel, with the shares soaring as much as 30% Thursday. But the investment in this article, they said, does little to solve what is arguably Intel's biggest problem. But as part of the deal, which gives Nvidia a 4% stake in Intel, Nvidia will use Intel's CPUs. So this is pretty big for Nvidia in its AI data center server systems. And Intel will use Nvidia's AI tech in its semiconductors for personal computers. So basically, they're giving a trade-off basically between both of their products. But crucially, as you can see here, the agreement made no mention of Intel's manufacturing business, Intel's foundry services, the segment of Intel that has drawn widespread attention from investors and the US government and is struggling with heavy losses as AI is upended the chip market. But this is overall definitely a good thing for Intel with this investment from Nvidia, this huge investment of $5 billion. But also, as of recent, we can see on August 22nd, President Donald Trump announced that the federal government had obtained a 10% stake in Intel. So as of the past month, we've had big players taking big stakes in Intel, with 10% of the Trump administration taking a stake in Intel, and then also 4% from Nvidia. So with that being said, as we can see, Trump administration, the federal government did give a press release where they purchased 433.3 million shares at $20.47. So the Trump administration invested in Intel primarily to strengthen the domestic semiconductor industry, because Intel is mainly based in the United States and they want to keep that domestic with the Trump administration. That is why they're also having tariffs. So that's the big thing with the Trump administration, trying to keep it more domestic. This move is part of a broader strategy to maintain U.S. technological leadership, especially in the race for AI. The investment of $8.9 billion in Intel common stock effectively converted grants that were previously allocated to the company under the CHIPS and Science Act, which was passed during the previous administration. This action was also to probably help them hopefully get a good return for taxpayer money. So with that being said, with these two huge investments, why is Intel stock still down a lot in the past, say, 5 years? First, it's manufacturing delays and technological lag. For a long time, Intel was the undisputed, basically big semiconductor, especially back in the big tech bubble. This was one of the biggest companies back then. However, the company fell behind in the race to develop more advanced manufacturing processes, getting stuck at its 10 nanometer node for an extended period. This allowed competitors like Taiwan Semiconductor to surpass Intel in producing smaller, more efficient, and more powerful chips. Also, the rise of competitors have really harmed Intel, with AMD and Nvidia, mainly Nvidia really taking over Intel's basically. But this is a good thing that Nvidia is investing into Intel. I think it's a good thing, but there might be some things that maybe Nvidia does see a good thing in investing in Intel so they can get even more leverage over Intel. Who knows? But on at least face value, I think this is a good for Intel. Obviously, the stock was up 30%. Also, they've had some strategic missteps Missing the mobile revolution, Intel famously passed on a deal to provide chips for the original iPhone. Also, failure to capitalize on AI. Also, the integrated device manufacturing model. While its vertically integrated model of designing, manufacturing its own chips was once a strength, it has become a liability for Intel. So, with that being said, I'm be getting into Intel stock, going to my valuation investing website to see whether or not we should be buying this stock today. But first, let's go over to the 7-step stock analysis for Intel. So if we go over to my valuation investing stock analysis platform, as we can see here, this is the home web page. Just give you a quick overview of this. If you want to go and get a free trial for this website or platform, whatever you would like to call it, for stock analysis, go over down in the description or in the pinned comment. I'll be having a Patreon. So all you have to do is you can get a 7-day free trial for the Patreon. After that, it's going to be only $8 per month. I think this is one of the cheapest and one of the best stock analysis tools out there. Definitely the cheapest at only $8. But if you want to go over, you have to go to Patreon and just become a member. You get a quick 7-day free trial to start and look at valuation investing. And all you have to do is I put a post in the link in the Patreon. Once you become a member, then you can just go and press the link. You go to the website. All you have to do is log in, and it automatically will log in as long as you are a Patreon member. So if you want to take a look here, we also have portfolio tracker. You can track your current portfolio. As we can see here, this is my current portfolio. You can see the portfolio allocation that you have. Also, you can go down here and take a look at your portfolio score with my 7-step stock analysis. But the big main thing I think is the stock analysis tool. So if we go over to the stock analysis tool, you can input whatever stock symbol you want. You get a quick overview of Intel, as we can see. You can also take a look at the price charts and financial history charts. So if we want to take a look here, but first let's go over to the biggest thing, the 7-step stock analysis. And as we can see here for Intel, this is not looking good for the 7-step stock analysis. As we can see here, we get an overall score of 0 out of the 7. So none of the key metrics are green for Intel. As we can see here, forward PE ratio is almost in line with what I want. I want it less than 30. It's at 30.49, so it's not terrible, but it's still not good. Return on investment is negative, which makes sense because they are losing money each year as of the past year. Also, the revenue growth rate negative makes sense. Once again, I mean, doesn't necessarily make sense, but they keep decreasing every year as they get behind Nvidia and AMD. Also, the EPS growth, as we can see, negative 444% because it has gone negative over the past 5 years. Also, shares outstanding have started to increase. I remember Intel used to be really good at buying back shares, but now it's increasing 2.1% over the past few years. Going over to the charts, as we can see, the revenue continues to go down, net income continues to decrease, and as we can see, the shares outstanding continue to increase. So overall, don't love it for Intel, but honestly, I am glad that they are selling shares to at least get some money and hopefully reinvest it back into the business. Also, the debt to free cash flow is non-applicable because they don't have any free cash flow. Also, the future EPS growth rate isn't possible just because it's not possible since they are at negative earnings per share. So you can't really necessarily determine the future for Intel, but analysts do see almost double-digit revenue growth for Intel in the future. So keep that in mind with our 7-step stock analysis. So if we take that into mind, going over to the intrinsic value calculator here, we'll do a projection period for the next 5 years. First, let's do the revenue growth. I think Intel will start to increase in the future, but do I think they're going to increase very fast? Honestly, probably not, but I do think Nvidia investment in them gives some more confidence in Intel. I do think they're going to start to increase back up again. Let's do bear case. Let's actually do bear case of 3%. Let's keep it 3%. For the base case, let's just go 7%. And then bull case, actually, let's do base case. Let's do 6%, bull case 9%. I do think that they're going to be growing at a decent rate. I don't think they're going to be growing very fast, though. Now for the future profit margin, this is kind of a hard thing to do with their profit margin negative as of right now. In the past, their profit margin has been in the teens and up to the 20s. Nvidia is at if you compare it to competitors, AMD, I'm pretty sure is at 10 to 20%. So for the future profit margin, say they do get profitable, let's say just bear case 5%, base case, let's do 12.5%, and then for the bullish case, let's do 20% if they can somehow get there. Now for the future PE ratio, a company growing at only 3%, I think they deserve a 12 PE ratio. Base case, company growing 6%, I think they deserve about a 16 PE ratio. And then a company growing 9%, I think a 20 PE ratio is fair. Now for the shares outstanding, do I think that they're going to be buying back shares? Maybe, maybe not. I'm not sure. Let's just do bear case, they increase at 1%, base case 0%, bullish case, let's say they buy back at 1% somehow. Now, with that being said, let's scroll down and look at our intrinsic value results. As we can see here, bear case, I get a projected price of $8.11. Base case, $32. Bull case, $79. So with that being said, I get an annual return for the bear case at 22%, base case 2%, bull case 21%. So right now, me personally, I'm not in love with Intel, but maybe they do increase that revenue by a larger amount. Say they get that revenue growth 10%. Let's see what for the projected price we get. We get a basically $40. So still not great to me. And if we want to take a look at the target price for a 10% annual return, honestly, I'm thinking a fair price to potentially buy this stock would be in the low 20s, high teens. So I think right now it got a little bit overvalued with Intel stock. So if you guys like this video, please subscribe, hit the like button, comment down below. And if you want to go get a 7-day free trial, just go to the Patreon link down in the description. You get full access to this. Also, you get a full access to the private valuation investing community. Also, I'll be sharing more details about my portfolio activity on the Patreon. So you get a bunch of things. I think it's a very good deal at $8. And you do get that 7-day free trial. So just go ahead, get a membership for 7-day free trial, and you get access for 7 days to this valuation investing website. So thank you guys for watching this video on Intel stock. Please subscribe, hit the like button, comment down below. Thank you guys for watching. See ya.